I'm Robin Walker. I'm a partner here at Deloitte New Zealand, and I want to tell you about some upcoming reporting rules for platforms. Now, you may be aware of these rules. There's a number of rules coming in New Zealand for platforms. There's GST rules, and then there's platform reporting rules. I'm here to talk to you about the platform reporting rules. Now, what exactly is being proposed? Well, in New Zealand, we're looking at having rules for platforms who need to report information about sellers to Inland Revenue. On the screen is just a diagram explaining what the rules do. So where you've got sellers of specific services or goods supplying through a platform to end consumers, the platform will become responsible for reporting that information through to Inland Revenue, and Inland Revenue will then share that information with other tax authorities where the seller is resident in another country. Now, one of the key criteria to be aware of is what is actually a platform. Now, on the screen here now is the definition that's been devised by the OECD and is being adopted by New Zealand. A key thing here is that the definition of platform starts out very wide. It can be any form of website or a mobile app where you have sellers and buyers interacting with one another. So if this sounds a little bit like your business, it's important that you do look at that definition and understand whether or not you are in or out of scope. There are a number of limited exemptions from the rules. The services which are caught through these rules are the supply of immovable property. So this is renting holiday homes or car parks and similar. The provision of personal services, and this could be ride sharing services, or it could be website design or online tutoring, all sorts of services. It's any sort of time or task-based activity, or the rental of a means of transport. So this is like a rental of a car or a mobile home, for example. A relevant activity is also the sale of goods. So if you've got a platform that has sellers selling goods through to users, then potentially your platform will be reporting under these rules. Now, New Zealand is adopting what the OECD has recommended. We're one of the first countries in the world to take this approach. If we look at this indicative map of who are adopting similar or the same rules, we can see that the EU and the UK are looking at these rules. They're in various states of progress there. And Australia is also looking at these rules. Now, Australia is not actually implementing the OECD rules. They're going it alone with their own separate set of rules. Now, a key issue to be aware of there is that under the OECD rules that we're adopting, from a New Zealand perspective, only New Zealand resident platforms will need to register and supply the New Zealand Inland Revenue with data. Any foreign based platforms do not have to supply the Inland Revenue. They will supply the Revenue Authority in their particular jurisdiction when that country adopts those rules. The Australian-based rules, however, are not the OECD rules, and potentially they apply to any platform regardless of where they're resident. So it may be a situation where New Zealand-based platforms that are operating in both New Zealand and Australia will need to comply with both sets of rules. Now, we've set out some more information about these rules in our latest edition of Tax Alert. So if this sounds like something that could apply to you, have a look and get in touch with your usual Deloitte tax advisor if you've got any questions. Thank you. Tune in next time.